Thanks, Julian, and good morning, everyone. And thanks for the invite to speak here today. My name is David Christie. I'm the president and COO of Globex since August 1st. Prior to that, I was the VP of corporate development for about 6 months with Jack. We work together and we sort of share duties across the gamut that this company has. I am a geologist by education and training and experience. I was a mining analyst for a long time as well with TD and Scotia. Following that, I was running money at Dundee Corp, and I ran two different junior mining companies. First of all, Eagle Hill Exploration, where we did a 5-way merger to create Osisko Mining, which was bought by Goldfields recently. And then I also ran a company called Orford Mining, which was bought by Alamos Gold last spring of 2020. Project in the Nunavut region of Quebec, which is quite exciting from a gold point of view, and that's why Alamos was interested in that. And of course, Eagle Hill had the Windfall asset, which is now going towards production with Goldfields Mining. So that's sort of my experience and where I come from. So I come from this from point of view of both a geologist and an asset manager, and I think that's perfect for what Globex is. So I'm going to try to run through this presentation, show you why I believe we have a lot of value in this company. We have great leverage to the gold price. We run this company like a business, not just like an exploration company. We don't issue shares. We don't dilute. We're here to make money, and I think that's something I think you need to understand as we walk through this company. Where's it not going? Sorry, not. Oh, there we go. Going to make some forward-looking statements. Have you read those at your leisure. So we are basically 4 different kinds of company all in one. We are an explorer. We acquire properties. We explore those properties. We try to increase the value of those properties through exploration. We are a project generator. So we try to bring those projects to a certain level, bring other companies in to spend their money on those projects. And that makes us a property bank because we end up having a lot of properties. We have over 260 mineral assets. About 150 of those are properties, and about 107 of those are royalties. And we have a number of options, about 8 options currently active in the company. And then because the end result of all our work ends up being we are a royalty company, we have 107 royalties, and a number of those are moving forward quite quickly. So very experienced board management team, geologists, financial professionals. We are focused on property acquisitions in established mining camps along really prolific structures that have proven themselves to be mine building structures. 40 of the properties we have are past producers. About 60 of the properties have either historic or 43-101 resources, and a number are at the PEA or level or higher. Some are at the feasibility stage right now. We'll talk about that. We are in tier 1 jurisdictions across North America and Europe. We have a balance sheet that is extremely strong, enviable of most junior mining companies of our size, with over 35 million in cash and marketable securities. Capital structure is very tight. We have no warrants issued. We don't issue shares, very low share count. Company's transaction focus, as I mentioned. We like to stake properties or acquire properties cheaply in a time when those assets or those commodities are out of favor, and then sell them when commodities or those assets are more in favor. As I mentioned, low share count, 56 million shares outstanding. Management owns about 12.71%. That's Jack Stock and his wife. The board is experienced geologists, accountants, ex-portfolio managers, seasoned management team of geologists, myself and our team in Rouen, and along with Jack. Our balance sheet, as you see in the lower left-hand corner, about 26% of it is cash itself. About 29% is fixed income, marketable securities. 32% of our balance sheet is in senior precious metal equities. These are like, Agnico Eagles of the world. So very secure, solid investments. And about 13% is in more junior mining companies. These mostly come from the properties we've sold. We get paid in shares and in cash. And so that's where most of those shares are coming from. And they started to move quite nicely. We're listed on the Toronto Stock Exchange main board, have been there since the 80s. We are listed in Germany on the Frankfurt and a number of other exchanges, and of course on the OTCQX in the United States. This is our board. Jack, I think he's the guy that invented this company. He's made it what it is today. I've just given my experience, and I'll let you read the other directors at your leisure, but they're very experienced and are quite involved in the company. So what do we do? As I mentioned, we incubate properties. So we stake properties or acquire them, do some work on those properties, bring them up to a certain level, get others interested. They spend money on them, and we enter option agreements or sales agreements, and we create royalties on the back end of those. We are here for income. So we're looking to make money all the time. We don't want to dilute shareholders. We want to increase the assets on our balance sheet. And we're here to make long-term revenue streams from royalties. That's really the end result. So we're always increasing our property portfolio value by spending money ourselves or having our partners spend money, and that increases the value of all those properties. Quick snapshot of some of our properties. You see in the map in the upper left-hand corner, that's all of North America. You can see Nevada, Arizona, Washington, some assets in Saskatchewan, but most of our assets are in the Abitibi, which is the center set map. You can see most of them sit along the big structures, the Desert Porcupine or the Cadillac Break, or the Casa Berardi Break. These are the big structures that we sit along, and you can see a lot of them are gold projects. Just going to one of the closer view of one of those structures. This is the Cadillac Tectonic Zone that cuts right through Quebec and Ontario, and most of the gold that's come out of Ontario and Quebec has come from this tectonic zone or the Desert Porcupine, and you can see the number of properties and royalties we have sitting on that break. We have a really good mix of properties along that break. You can see the growth in our projects here on this slide. So from about 50 projects in 2005, 20 years ago, not that many royalties, to 107 royalties today out of 262 total mineral assets. And the options are pretty steady through the whole period of time. Every year we have, a number of options on our properties, and we're trying to increase that number right now with gold prices hitting all-time highs this morning. This is a paramount importance to us. Just on a commodity diversification, you can see more than half of our properties and our royalties are in gold and precious minerals. And then base metals makes up the second biggest chunk. And after that, we have properties that are specialty metals or industrial minerals. So we have everything from manganese to magnesium to talc to silica in those other metals. So, gold, copper, lead, zinc, nickel, and then a number of number of specialty minerals and metals. Giving you an idea on some of the projects that we've closed deals on recently. So the Francoeur Arnfield sale to Agnico Eagle, that was a $15 million deal. We had the last payment this summer, $3 million. Rare Earth project we announced last week on Virgin Mountain in Arizona, a really good deal. A project we announced earlier this year with Briar Resources on an antimony gold project. There's 90,000 ounces of gold there inferred. They want to put that into production. So some really good projects have moved along. And then we have a number of others, from uranium to more gold, that we're looking to do deals on in the near future. So transaction focus, we are that. We have acquired about 235 claims this year through staking in the first 8 months. More than that, actually, because I know we've been staking this week and last week. And this presentation was created before that. We've done about 3 new option agreements this year. And we're working on more. We've bought back royalties on 3 properties that IAMGOLD had to extinguish those royalties on our properties. We consolidated ownership of a JV at the Black Cliff property, and we've did a bridge financing to help start a Canadian copper company in Chile. So we're willing to just step out of our normal bounds to increase value for this company. Taking a look at some of our partners, we have partners on 107 royalties and 8 option agreements. This is just a selection of those partners. And you can see there's some big companies here, some small companies, but there's a lot of them. And those guys are all doing work on those projects, increasing the value of those properties without us spending a dime. So I'm going to divide this presentation into sort of 3 important parts. First of all, the exploration we fund ourselves. Second of all, the royalties we have and the money that's being spent by our partners on those royalties. And third, the option agreements and the money being spent by our option agreement partners. Just to sum up, sort of look at the 3 sort of sections of our business. So on the exploration we're doing ourselves, this is just a sampling of some of the exploration. So Ironwood, we did 19 holes in 2024, upgraded our resource to indicated 108,000 ounces of indicated resource and another 8,600 in the inferred. We're assessing the steps on the Ironwood deposit and on the overall Cadillac, Central Cadillac wood property, because we think there's other potential on that property as well, and I'll go through that. At Lyndhurst, we are going to drill 2 to 3 holes in that project in the next month or so. This is a strong base metal target with good copper mineralization historically, 1.93% copper. So we're going to drill 2 to 3 holes there to test that geophysical and geological target. And the Rouen merger sits right on the Cadillac break that I was mentioning. We're going to drill 3 to 6 holes there, about 1,000 meters. That's going to happen this year as well before the end of the year. We're drilling the old East O'Neill showing, which is a 7 gram over 10.27 meters showing. We're quite excited to get the drill in there and drill those holes. So just on the Cadillac, Central Cadillac Wood project, where the Ironwood property is, you can see on this map the pink unit that cuts through the property. That's right along the Cadillac break called the Pichet Group. To the west of the Cadillac Group is the Radisson project called O'Brien. They are drilling like crazy over there. They just raised $25 million. So we are going to look hard at our Pichet Group that cuts through our Cadillac Wood property to see whether we have targets there to drill that are similar to what they've been drilling. We think we do. We've only drilled to probably 300 to 400 meters depth. They're drilling down to 1,000 meter depth. So there's lots to look at here on that project, as well as the Ironwood project, which we're looking at environmental studies to move that towards whether we can make a decision on that in the future. On the Rouen merger project, you can see the circle in the center here. That's where the East O'Neill showing is that I mentioned, the 7 grams over 10 meters. But you can see to the east of that project, all the green dots, that's the Hiva Haska deposit that Hecla drilled off. There's about 1.6 million ounces there. Stops basically at our boundary, no drilling really as you move west of the boundary. So we're quite excited to get onto our project here and drill some holes. We think there's huge potential on the Rouen merger property sitting right on the Cadillac break. Lyndhurst, as I mentioned, we're drilling a geophysical target. You see all the copper showings across this project. We're in really good rocks here, very similar to Kidd Creek type mineralization. So we're excited to get in here and drill a couple holes and see what we hit. Moving on to the royalties. These are all gold royalties because I think it's important to highlight our gold leverage right now. Kewagama, New Alger, they sit on the east and west side of the Radisson O'Brien project. Radisson's drilling 50 to 60,000 meters on that project right now. They have 4 drills operating. They just raised $25 million. In their PEA they put out earlier this year, they said 22% of the recoverable gold reported to Globex is Kewagama, 2% NSR royalty. So that's exciting. And they're going to drill more holes on Kewagama right now. So we think that's going to only increase. Parbeck, this sits right next to Agnico Eagle's Canadian Malartic mine. They increased their resource by 29%, and they have an active exploration program. Nordo West, East, and North. This is a program operated by Cartier Resources. They've started a 100,000 meter drill program, which is going to be completed in the next 18 months. They already have 2.35 million ounces there. They're backed by Agnico Eagle as a big shareholder. We think this is an exciting project to watch going forward. Before I move on to those 3 projects, the one project that is going to production in 2026 is the Lincoln Mining Bell Mountain project. We have a 3% GMR on this project. It's going to produce about 55,000 ounces of gold over 2 to 3 years. There is exploration upside from that. So we're excited to see these guys move forward on this project. So on the Kewagama and New Alger royalties, you can see this map shows those 2 royalties quite well. And the east of that, our project and the O'Brien project that has the New Alger and Kewagama royalty is the most exciting belt to be drilling in the world with the Cadillac break. So we're going to be looking more at that as we move forward. This just shows you the Kewagama boundary here. That's the red line that goes through. Everything to the east of that is on the Kewagama royalty. And you can see some of the hits they're getting, 8.41 grams per ton over 2.2 meters, 14 grams over 1.2 meters, some pretty spectacular numbers. So I suggest you follow Radisson and the drilling they're going to have over the next little while. Parbeck, I mentioned that one sits next door to the Canadian Malartic mine. We think this can be bigger. We're excited to see them continue to drill more. And of course, the Cartier Resources, we have a big chunk of land there along the main contact with our royalty claims. So we're excited to see what happens with the 100,000 meters they're going to drill. So there'll be a lot of news from these guys over the next year. So lastly is our options. We have 3 options we're going to highlight here. The Duquesne West, Emperor Resources is drilling there. They've just they're in the middle of raising money. They're going to finish a 8 to 10,000 meter drill program. They just doubled the resource there to 1.46 million ounces at 1.69 grams. Devil's Pike, this is Bria Resources. This is a fairly new one. This is in New Brunswick. These guys want to mine that 214,000 tons at 9.6 grams per ton gold, but they're also hitting really high grade antimony there. Bald Hill, Antimony Resources, they're in the middle of a 6,000 meter drill program, which will be done early 2020. Well, or this year will be done, and then they're going to put a resource out in early 2026. So the Emperor project, these guys will be paying us another payment very soon, $1 million plus shares. This is a great deal for Globex shareholders, and we believe that they're going to continue to expand the size of this deposit as they move forward. Bria, they just put these maps out in the press release the other day. They're hitting spectacular antimony numbers in grab samples at surface, 27.6% antimony, 57% antimony. They have some grab samples in gold too, near what they call the Vale Road gold deposit, 9.48 grams per ton gold, 1.47 grams per ton gold. So really good numbers there. So really good things happen here. And of course, then the Antimony Resources project, they've been drilling quite aggressively here. They've been hitting some really good numbers. 18.19% antimony, some really spectacular numbers. So have a look at this one, watch it. These guys are doing good work. So when you look at the next year and the catalysts, actually not even the next year, the next 6 months, there's a lot of catalysts that are coming for Globex shareholders. When you look at our royalty properties alone, Brunswick is going to put a maiden resource on the Mirage Lithium project. That's our Lac-Escale, we call it. Cerrado Gold, we were talking to them at a conference this past week. They're going to put out their feasibility study in Q1 2026. This will be huge for Globex shareholders because you'll be able to see the value of our royalty on that. We have a 1% GMR on that project. So that'll be right in their feasibility study. You'll be able to go right to the line item of that royalty. In 2026, Lincoln Bell Mountain project is going to go to production. Ongoing drilling on a number of projects, Radisson's O'Brien project, Cartier's Cadillac project, and Toma Gold in Chibougamau West Block. And then looking at our properties ourselves that we're exploring, as I mentioned, Ruan Merger drilling this fall, Lyndhurst Copper drilling this fall, and we're doing geophysics on the Courville project as well in the coming weeks. And in early 2026, we will be talking about what we are going to do with Central Cadillac Wood and progress on Ironwood. Catalysts from option properties. So early 2026, Antimony Resources will put out a maiden resource on the Bald Mountain. Ongoing drilling and exploration from Emperor, Toma, Electrometals on Fabi Bay, Bria and Devil's Pike. So lots going on with Globex in the coming months. I think there's a lot of news you're going to see, as there always is, but there's going to be some pretty exciting stuff. So just to sum up the company, I think I've shown you we have a very tight capital structure and a history of not diluting shareholders and making money for the company. We have an experienced, fiscally prudent management team and board. We have income from both royalties and options. We have no debt, and we have a very strong balance sheet that we are going to keep strong. We are well positioned on major gold localizing structures such as the Cadillac and Destor Porcupine breaks with property and very large royalty portfolio. We can execute exploration programs quickly with a fully functioning staff and exploration office in Rouyn-Noranda. Great group of people, really professional. And we have low political risk. We are in great places in the world, such as Quebec, Ontario, New Brunswick, Arizona, Nevada, Saxony, Germany. So we believe we're in some of the best places in the world. And that's all I have for now. If you have any questions.
All right, David, that was a very interesting presentation. Globex is, as you say, in the business of making money, and this is good to hear in these times of rising commodities prices. I will pick your brain on just one small thing. You quite often talk about GMR, so a specific kind of royalties that Globex has, but that is a bit different than what the other companies are doing or what we can see in the other contracts. Can you tell us what's the difference and why it's at Globex's advantage?
Yeah, so the difference between a GMR and an NSR is basically there's nothing deducted from a GMR. Whereas a NSR, you're going to get refining costs and smelting costs deducted from the NSR and transportation costs. So NPI gets a lot of things deducted from it. So GMR is, so if there's 1,000 ounces of gold produced and you have a 1% GMR on that, you're going to get 1% of that gold. Nothing gets deducted, and that's the basic difference. So from an accounting point of view, there's never going to be a disagreement. There's never going to need to be an audit. The only thing we have to audit is make sure they tell us exactly what they produce. But otherwise, there'll never be an audit. And we get to choose in most of our agreements whether we take the metal or the cash. So depending on the environment we're in, we can make that decision ourselves. So I think it's a great way to have a royalty as opposed to, but we do have some NSRs as well because we've bought some the Quagga, it's an NSR.
Okay, great. Another question, and specifically, not just generally, price of gold is higher, so the value of your properties are higher. But what does it change the price of gold, for example, right now with your portfolio properties, everything that was not option now and so on? And what more than that, what does it change in terms of, for example, cutoff grade and so on? What becomes economical that maybe was just at the line before?
So I think you're seeing that in Emperor. They put out that new resource. They doubled the numbers they have there. If gold was still 1,500 or 2,000, they probably wouldn't have come out with such a big number because they could use much higher gold price. They're not using 4,000, of course, but I think you're seeing people use 2,500 kind of thing. So that still has a huge impact on the amount of sort of lower grade material you can mine and make money at. And I think that's the big difference. You're going to see a lot of bigger deposits that are lower grade. The detours of the world in the Canadian Malartics of the world. There's going to be more of those kinds of deposits, I think, as you move forward here.
Perfect. We saw also Quebec jurisdiction now is 22nd with the Fraser Institute and so on. How does a company like Globex leverage and risk and still stays in those top tier jurisdiction time after time with new project, for example, going to Saxony or maybe other places of Europe or maybe even United States?
Well, I think, we know Quebec the best because that's our backyard and we have a team there and Jack's worked there his whole career. So I think, and I've spent a lot of time there myself. So I think we're always going to be in Quebec, no matter where it ranks with the Fraser Institute. But we are also opportunistic in other places in the world, acquiring properties in New Brunswick when it made sense in the gold antimony space. And, we've now optioned both of those out to good partners. So I think you'll continue to see us be opportunistic in the world. And look for places that we feel safe in. We're always going to go to places that are democracies that are, that have the rule of law and that you don't have to worry about, anything really too much. But if we see that there's other places to be that are also safe, we will continue to expand that.
Great. And how can investors evaluate your backlog and your revenue and EPS guidance? So which major assumptions you have taken, obviously that you can publicize, not just your internal report, but what's out there?
Yeah, so I think you're going to see us continue to be a little more open with what's coming forward. And that's why I put the upcoming catalyst page in. I think we need to talk more about what's coming and what we are going to do and what's coming out as far as revenues and stuff. So, the next big thing for us is that Lincoln Mining project in Nevada going to production in the coming year. Things like the Mount Sorcier project and the potential royalty from that, like that'll be huge for us. And the NPV on that project, once you see the feasibility study, will be apparent. You'll be able to calculate it yourself, and it'll be huge.
All right, and on that, so on the catalyst, do you guys take any active part into companies that are going to put out their resource estimate or stuff like that? So basically, for investors that are out there, how involved are you staying in the plays that you're putting out as a joint venture that you're optioning out? And then what does that drive on your cost and so on?
Well, we don't really do joint ventures. We had one and we bought them out. That was the Blackcliff property. But for our other projects, we option partners. We get the chance to see the press releases before they go out and give them our input. But as you know, we put out our own version of the press releases and often put our own comments on those. So you will continue to do that, but it's if someone's spending money, it's their money. They'll put out what they believe is the thing to put out on that project, right? So.
All right, we still have 4 minutes to cover. Let's discuss about something that's I think is important for Globex and all the companies that are out there. We do see more traction. A lot of the IIF we had always discussion on share price and share price and share price, and share price are coming and they're rising for quite a few companies in the sector in general. What a company can like Globex investors should think about into why would the share price rise, apart from simply the fact that, for example, you do not own personally any producing assets, you do not produce yourself, and so on. So let's recap back on exactly how you make money and exactly how you spend it, so it's clear for investors here.
Yeah, so I think there's sort of three ways why our goes up. First of all, our balance sheet is leveraged to gold. You look at the investments we have in precious metal stocks, base metal stocks, sitting on our balance sheet. We've got a big chunk of our very large Agnico Eagle, Pan American, Alamo. Those stocks are moving up, money just sitting there. Secondly, when our portfolio of royalties and option properties are being worked by the companies that own them or have the option with us, and they are able to raise money in an elevated gold market, that increases the value of every single one of those properties. So, for instance, with Radisson just raised $25 million and the only project they have is the O'Brien project. So it's all to go on that project sitting next door to our Cadillac Wood property. So it makes Cadillac Wood worth more, but it also makes our two royalties on the O'Brien project worth more, the New Algier and the Kewagama royalties. So I think when you see that kind of money being spent on somewhere where we have a royalty or we have the property next door, it increases the value of both of those things. And then I think in the rising gold market, I think you're going to see us probably do some more exploration ourselves. If we can't sell the project, but we believe in it, we're going to do more work ourselves. So that's going to increase the value of those projects as well. So Ruan Merger, we're going to be drilling that project. We will, we think there's some really good potential there. There's great potential on almost all our properties. So we're gonna advance the ones that we see fit to advance. One project we didn't talk about is the Eldridge project. I just put it up on the screen here. This is a deposit a property we bought. This produced 730,000 ounces of gold in the 50s and late 80s, early 90s. Below the old workings, there's all hits. So we haven't done any work on this other than 3D compilation, but we will do a lot of work on that going forward and see what we can do with that. If we don't find a partner on it, we will do it ourselves. So I think either doing the work ourselves, partners doing work on the properties or royalties, and our balance sheet. Those are the three items I think you can see the leverage to the gold price.
Perfect. I think this is quite clear to everyone. It's now 16, so we're out of time, David. So thank you very much for joining the IIF. Very interesting answers on why Globex share price should raise, could raise, or at least the potential is absolutely there and raising by the day. Again, thank you for joining, David. And then we'll be maybe seeing you or Jack at the next event. Thank you very much.
Thank you. Bye-bye.